called Cerro. It's owned by Anglo Gold. It produces 250,000 ounces a year. The landscape at Cerro Moro is flat. It's an ideal area for mining. There's very little competition for land use. It's significantly down south. Perfect area to develop a mine. This slide represents the resource today based on the drilling that we have on 3 of the 30 veins that have been discovered. Now, the 3 veins that I'm referring to are Esperanza, Gabriela, and Escondida. We have other veins that don't have enough drill holes in them yet to fall into this category. What is important, if you look at the bottom right, you'll see the gold equivalent ounces at 646,000 ounces, based on 19.2 million ounces of silver, giving you a significant credit to the 371,000 ounces of gold. What's really important is the grade. You can see the average grade between the 3 zones is 18 grams gold per ton. Now, this makes it very different from most projects in the industry, given the grade. This is actually showing the progress of drilling in the Escondida vein, which we are targeting first for potential development. You're looking at a longitudinal section, so you're taking at the vein and you're looking at it side on, such that each of those dots is a pierce point into the deposit. And you can see there's many, many drill holes. Within this one slide, you're looking at approximately 400 drill holes. Each square there represents 100 meters in depth. So you can see the drill holes. Some of the holes go to as deep. I think the deepest hole we have is at 300 meters, but for the most part, our drilling is in the top 200 meters only. Now, Exeter is drilling another 200 holes at present to finish the drilling it needs within the Escondida zone for mine development studies. But you can see the grade. What's important in purple on your screen is better than 50 grams of gold over 1 meter. It might be 100, it might be 200 grams of gold over 1 meter. This shows the grade, which is so exceptional for the project. There are other prospects, and I mentioned there was 30-odd veins on this property. The one I've been speaking of is the bottom left-hand one called Escondida. And in fact, Escondida, you can see all those black dots are drill holes, and on Escondida there's so many drill holes that the entire slide, that area is black. We're also drilling to the top left of that, moving to the left, because we have ground on the west side, being the left side, with a company called Foma Cruz, which is 80%, it's a joint venture, 80% Exeter, 20% Foma Cruz. So Exeter has 4 rigs on this property. 3 of the rigs are defining the ores on the known one, but we are drilling other targets. And going forward, investors should expect news on those additional targets. So our current activities are drilling to infill drill to give us enough holes to do mine planning. It's exploration to expand the 646,000 ounces. And it's also a significant amount of engineering work such that we are in 2010 into detailed mine planning and into mine permitting. So we don't see any significant obstacles on infrastructure, being that we are close to the coast, we're close to a population area, we are close to a transmission line for power, etc. You can see, looking at years across the top, that by the end of 2010, Exeter anticipates the project being in the mine permitting stage. In other words, pre-feasibility will be completed, and that's what we're calling development option study, and we are moving forward into the engineering phase. So today there's a considerable amount of engineering taking place. You will see a new resource announced at the end of Q1 2010 to take it from inferred to indicated and to capture those additional ounces that have come into our most recent drilling. Looking at Exeter in an industry context, and I'm looking at Exeter as an investment here. Really, Exeter is mostly known for what's happening in Chile at CASPICHE. At 19.6 million ounces, it is one of the big discoveries made by the industry. Major companies acquire projects like that, and Exeter has a number of the senior companies under confidentiality provisions. They are regularly accessing the data. In fact, by the month, they access the data to look at the project with a view to doing a transaction with Exeter. Why do major companies look at projects like that? Because they carry their ounces at significantly higher valuations than does Exeter. Our market is valuing Exeter today at approximately $20 an ounce. This slide here shows an interesting comparison. From an investor point of view, you can look and say, what is CASPICHE potentially worth? And this slide is showing CASPICHE on the left-hand side, but it also refers to Cerro next to it, to Lobo Marte, and El Moro. Now, why are we referring to those other projects? Because all of those projects were purchased by either Barrick or Kinross. And when you look at the columns here, the left-hand column in blue refers to how many ounces were purchased in each scenario. So in Cerro Barrick bought 12 million ounces. On the right-hand side, where it shows 19 in terms of Cerro the 19 refers to the gold equivalent ounces that they purchased. And in red, it shows what the purchase price per gold equivalent ounces was. So there's been transactions at Cerro Lobo Marte, and El Moro, where the acquiring company be paid between $29 and $42 per gold equivalent ounce. Looking back on the left, you can see CASPICHE. CASPICHE is valued in the market today at approximately $13 per gold equivalent ounce. That is really representing the opportunity for investors. By de-risking our projects, you can build that value such that you start to look at Exeter as a premium to the net present value of the project, driving up those valuations. Slide 25 really shows the effect of marketing Exeter at different market capitalizations per ounce. We see transactions being done $30, $40 an ounce. What impact would that have on Exeter's share price? Given the issued shares we have today, at $30 market cap per ounce, we would be $9 a share, and you can see it at $45 an ounce. That is why Exeter was in a position to raise additional funds. We are in a position where the new investors, largely sophisticated funds that participate in both gold and generalist funds, who can understand the growth potential of Exeter. This slide does not refer to the effect of adding more ounces. Now, Exeter is doing that by drilling on both of our projects. It is simply saying this is the increase in value you get as we de-risk these projects, with the emphasis being on CASPICHE. If you would like to follow mining analyst recommendations by Canadian brokerage firms, I cannot endorse them, but this slide does refer to research put out by a number of firms where they have researched Exeter. They've done site examinations. In fact, all the companies there have done site examinations and are in a position to consider the value of Exeter. That concludes our presentation, and I'd like to thank you all for joining us and encourage all of you to take this opportunity to post any questions you might have to the company. So for those of you who are watching this presentation at a scheduled time, please begin posting your questions now. For those of you watching this presentation outside of the scheduled times, please post your questions now and check back later for your responses. Thank you.